If you have questions about Amazon RSUs, you've almost certainly come to the right place. Now, first off, what are Amazon RSUs? Well, RSUs are simply restricted stock units. When you're hired on at Amazon, RSUs typically make up a component of the total compensation package that you're provided. Now, restricted stock units are essentially just shares of Amazon stock, but they're restricted because they pay out over time. They don't pay out all at once, but they pay out over a very specific vesting schedule. In this case, let's dive into the vesting schedule just to have a look at it here. So at the end of the first year as an Amazon employee, you receive 5% of those shares of Amazon stock that you've been granted. At the end of year 2, we're looking at 15% of those shares. Years 3 and 4, it's a little more nuanced. So it's actually every 6 months you get 20% in year 3 and in year 4. So the quick math says that 20% and 20%, that adds up to 40% over the course of the year, right? So let's look at an actual example here. In this case, we're going to say that somebody receives an initial grant of 4,000 shares of Amazon. Now, admittedly, this is a very generous grant. This is probably for somebody that's a level 7 or an 8. It does make my math easy, which is why I used it. But anyway, you can use your own numbers, plug it in, hit pause on the video if need be, and just adjust things to show what your numbers might look like. But in this case, again, somebody who has 4,000 shares of Amazon that they've been granted at the end of year 1, that's 200 shares that they'll receive. The end of year 2 is 600 shares, and then in year 3 and in year 4, it's 1,600 shares in each respective year, broken up 800 and 800 shares every 6 months. So if we want to really dive in here, though, we can actually isolate year 1 to say, well, how does this flow actually take place, right? So in this case, 200 shares, we're going to assume that Amazon's stock price has done pretty well and it's trading up at $150 per share. Obviously, whatever the price is on the day of vest is going to be the number that you want to think about, but we'll say it's trading at $150 a share. Times 200 shares, that's $30,000 worth of Amazon stock that you receive. Now, something to think about, that's $30,000 of taxable income. It's considered all taxable. Now, what's really nice is by default, Amazon is going to take 22% of those shares, and they're just going to sell them and send that money directly to the IRS. So they're going to essentially help you pay your tax bill so that there's not some big surprise come tax time of the following year. Now, with the remaining 78% of shares, in this case 156 shares themselves, they're going to deposit those into an individual account for you. For most of you watching this video, that would be at Fidelity, at which point you can do whatever you want with those shares. 156 shares of Amazon just sitting there, do whatever you want with them, right? So if this is year 1, let's jump forward to year 4. So in year 4, we have substantially more shares that are vesting. In this case, again, we talked about 1,600 shares vesting over the course of the year. And let's also, let's be optimistic here and assume that Amazon stock prices continue to move up quite drastically and say that we're trading at $175 a share. Well, in this case, that's $280,000 of total Amazon stock that you're entitled to. Now, again, Amazon's going to automatically withhold, let's just call it 22%, send that money to the IRS to pay the tax bill, in this case, $61,600. But then you're going to receive the other 78%, in this case, 1,248 shares of Amazon stock, right? And that's going to be deposited in your account. You're going to look the day after the vest and say, holy smokes, I got a lot of Amazon stock sitting here, right? Now, 2 things that we would think about in a case like this. 1, if you truly have $280,000 worth of Amazon stock vesting in any given year, 22%, it's a good problem to have. 22% is almost certainly not enough tax withholding. Now, what's really nice is that Amazon does actually allow you to go in and update that tax withholding figure. You can increase it, which is probably what you want to do if you have numbers that are this big. And then the other thing that we would simply think about is diversification. You work for Amazon. You've got all these shares of Amazon that you're receiving. I'm going to put out a whole nother video all about diversification associated with RSUs when they vest. Probably worth a watch once that video comes out. So anyway, big picture here. RSUs, they're simply shares of Amazon stock that you receive as an Amazon employee over time at a very certain vesting schedule. The taxes are withheld, or at least a portion should be automatically withheld for you. And then we think about diversification. So anyway, pretty straightforward. If you found this helpful, just super quick, if you could like this video, it'll help other Amazon employees who have questions about RSUs find the video. And learn the same stuff that you're learning. We'd certainly appreciate it. So if you have any additional questions, please feel free, reach out. You can find me on LinkedIn. I'm pretty easy to get a hold of. I promise I'm a real person. I will respond to your request. Lars Phillips, financial advisor, lead advisor and partner at Avier Wealth Advisors. We work with a lot of Amazon employees, and I think that we do really good work with them. So anyway, if you have any questions, please feel free to reach out. Last but not least, we have to show the standard disclaimer. If you have any questions, please reach out and let us know. Cheers.